Ciao, Christoph. Hello everyone, I'm Christoph Knaack. I'm honored to have been invited by the Beijing Private Equity Association to share some insight on the development of the private equity and venture capital markets in China and the potential for growth. First, a few words to explain why I and Preqin are qualified to speak about private equity and venture capital in China. Founded 20 years ago, Preqin is the go-to platform for data and insights for investors and fund managers in alternative assets. Private equity is by far the biggest alternative asset class, but we also cover venture capital, private debt, real estate, infrastructure, natural resources, and hedge funds. With 15 offices in 10 countries, we have more than 300 research professionals. They are dedicated to sourcing unique, actionable insights and data, talking regularly with LPs and GPs, and using the latest technological tools to harvest data. We are also a designated data partner of several leading government agencies and associations around the world, producing market benchmarks that help prospective investors understand the characteristics and performance of new and emerging markets. We have long regarded Asia-Pacific a vital part of the global market, with our Singapore office opening in 2010. However, we recognize that such a large and multifaceted market as Asia-Pacific cannot be understood or served from only one place. Therefore, we have since opened offices in Hong Kong, Tokyo, Bangalore, Sydney, and this year, Beijing, to serve the industry better. So, where does China fit in the global private equity and venture capital landscape? We would describe China as a growth market. By this, we mean it has already been through the growth spurt and the slowdown seen in other regions as they become established, and is now positioned for sustainable long-term growth. The first chart shows the spectacular growth in fundraising by China-based private equity and venture capital managers between 2014 and 2017. It also shows the sharp decline in the number of funds since 2017, as well as the slightly slower decline in capital raised. Whilst there are challenges for private equity and venture capital in the current economic environment and challenges specific to China, this chart is not quite as alarming as it looks. First, cross-border fundraising in 2020 and 2021 was particularly impacted by COVID-19. And second, peaks and troughs during growth phases are normal in private equity markets. The second chart shows how fundraising in the US, by far the largest market in the world, slid in the early 2000s after the dot-com boom, and then again at the end of the decade after the global financial crisis, before the growth trend resumed. Whilst many China-focused fund managers will be unable to raise another fund, those that have delivered for investors will emerge from this period stronger. Another way of looking at the size of the market is by assets under management, or AUM. AUM in private equity has two components: dry powder and unrealized value. Dry powder is capital raised but not yet invested. Unrealized value is the value of existing portfolio companies as reported by GPs. In the chart, you can see that AUM of China-focused fund managers has grown steadily over the past decade, with private equity venture capital AUM doubling in the past 3 years. You can also see that China-focused AUM is more than twice the rest of Asia-Pacific combined, has overtaken Europe, but is still only around 40% of AUM in the US. AUM growth at private equity venture capital funds targeting China has outpaced US-focused funds over the past decade, with a compound annual growth rate of 35%, nearly 3 times as fast as the 13% seen in the US. And there is considerable headroom for further growth. A crucial element of the private equity model, and one that has slowed fundraising in China, is the recycling of capital through exits. Historically, exit values have been considerably lower than investment levels in China, though this is to be expected in a fast-growing and emerging market. That said, there are reasons to be optimistic. This chart shows how the value of exits from venture capital investment has soared, from 12 billion in 2016 to 88 billion last year, largely due to successful IPOs. Fund managers have found it harder to exit buyouts, where the aggregate exit value has fluctuated between 13 billion and 37 billion over the past 10 years. The marked difference between China and more mature market is that trade sales to corporates account for only a small proportion of exits, whereas they dominate in North America and Europe. We expect private equity and venture capital focus on China to continue to be attractive to both domestic and international investors. There's the obvious attraction of a dynamic and changing economy that is set to become the world's largest before long. Then, there's an emerging track record of improving performance, which you can see in this chart. China fund performance still lags the US, which is the top performing region because of its size, sophistication, and liquidity. But the gap has narrowed over the past decade. I hope the summary analysis has given you some insight based on Preqin data as to why we believe that China will be a good market for private equity investors. But will private equity be good for China? We believe so. Before Preqin, I worked for KKR, one of the world's largest investment managers in private equity and alternative assets. I have seen the private equity model firsthand and believe that there are structural reasons, from alignment of interest to shortened communication lines to access to expertise and networks, why private equity investment helps companies improve and grow. Companies supported by private equity grow fast, create jobs, boost investment in R&D, and pay more taxes. I'm delighted to see the initiatives being taken by the Beijing Private Equity Association to promote the industry and encourage policymakers to support it. I'm confident that private equity and venture capital investors will make a great contribution to China's future. And we at Preqin are looking forward to supporting you on that journey. Thank you, everyone. 谢谢各位。